Hello there guys, and welcome to Ready Steady Crypto. So here I'm just going to go through how we use indicators such as the MACD and the RSI. So if you're familiar with the few previous lessons that I've uploaded, you'd already be fully aware of how support and resistance is plotted, and also how we plot moving averages. So now I'm going to introduce to you the MACD. The MACD is the moving average convergence and divergence indicator, and it is a trend following indicator. It can be used to identify trends and continuations in patterns. So what does that mean? So here you see right at the top of the MACD chart, you have two lines. One of these lines is representative of a price line, and the other one is a moving average. So a moving average is obviously what we have here, and this is just built into the MACD indicator. So you have two on there. So once you get an overextension either to the upside or to the downside, you usually get a cross of these lines. This then indicates that price action is going to move away from said area. So here it's at the top, so we've got a crossover, and then at the bottom there we have a crossover also. So as you can see here, when we got the crossover on the 25th of October, this was this part here. So this is why then we got a slow decline and a big sell-off in price. That was the hidden indication that this was going to happen. So right now we've got a crossover here, which is where I was talking to you about where we placed the trade down at 36 and just what took us to lead that trade. And this is why. So we got a bullish crossover here, and then the MACD, these are known as histograms. So you have a bearish side and a bullish side. Now, depending on how much volume is being pumped into the market, depends on how high and aggressive these indicators move. If it's fairly flat and sideways, they don't really tend to move that often, especially on the lower time frames. So what's next? Next we have an RSI. What's an RSI? So an RSI is a relative strength index. This gives us a good indication of when something's overbought or oversold in the market. It can also tell us the best time to enter and the best time to exit a trade. So if you look here, you can see when we approach this line, which is at 80% of the value, and at 20% of the value becomes oversold. To get these oversold and overbought lines onto your diagram, you can click on the settings tool there. Always have it on 14. You can go to the style. I have the upper band on a red on 80 and the lower band red on a 20, and then the RSI on the dark green. So I know anytime price action of this green line hits the top of this red line, I'm looking to sell a position. Alternatively, when I'm at the bottom of this red line, I'm looking to buy a position. So that's just a quick understanding of how you can use indicators in confluence or in confirmation with current price action to dictate how a trend is potentially going to unfold. Now, there's another little trick that indicators hold, and these are really hard to spot. So try to get the overbought, oversold, and the crosses right on the MACD first before you start looking for this type of hidden divergences, they are called. So what's a divergence? So first of all, I'll take you back to this Bitcoin chart back in February when we had the big bull run. We've come down, we've set a higher high. We've had a higher low, then we've set a higher high. We've created some kind of uptrend, and we've set another higher low, and then another higher high, and then the same again, just on the trend line, a higher low, and then a higher high. So this looks like that we're in an uptrend and things are going to keep going and going and going. Now, this is how indicators can help us determine what's actually really going on behind the scenes. So as we've got ascending price action, you'll see here we have a descending set of lines of the moving average and the price line. This is taken from these squiggly lines coming up and meeting it. This is what's known as a divergence, because we are setting higher lows followed by a lower low, followed by a higher low, followed by a lower low, another higher low, and then another lower low. So that's a bearish divergence. So divergence basically means a disagreement in what this is telling us. So if we've got one indicator suggesting that we're going to the downside while price action is going up, we could have assumed at some point here at the lowest, that's when the big crash was going to take place. Now, the fact that you've already marked support and resistance, here, and you know that you've wicked up into this area, you're more than likely going to sell your position and potentially take a short. Next is the RSI. So here you can see that we're severely overextended on the overbought side. We're above the 80%, which is in real overbought territory. So this means that a lot of whales inside of the market are going to start to short the market at this point. So they would have already arrived at, sorry, not at that point, a bit further on. But you can see here we're overbought, so people are starting to sell positions here. This is in this little part there. We've obviously then had the bull run to the upside, but even so, the RSI is giving us a higher highs, higher lows, lower lows, and then higher lows, and then another final lower low. So that's a bearish divergence on the RSI. So do you understand how divergences work now? So just to tell you, a convergence or a confluence basically means to confirm something. So if these was all trending to the upside, and that was trending to the upside, and this is trending to the upside, that would be a convergence or a confluence in the market. We have two indicators that are confirming that price action is going to keep going up and nothing's going to really stop it. Until you have a divergence, meaning a disagreement in the market. So for this uptrend that appears all good on the charts, secretly behind the scenes, we have a divergence, meaning that these two indicators are disagreeing with what's happening with the price, and potentially we're going to see a crash or a sell-off to the downside. So that's just a quick understanding on indicators for the MACD and the RSI. That's how I use them to really put an edge on my trading strategy throughout the days. Obviously, on a higher time frame, the same as everything, they are more accurate. As the lower time frames, you really do need to understand the lower time frames as well, because every single indicator paints a different picture on a different time frame. But over time, this is just something that you'll naturally learn, you'll naturally grasp the hold of, and you'll be able to see these things without even having to plot them like that. So I hope you really found this little tutorial useful. If you'd like to leave us a comment and follow and subscribe our accounts, it'd be really much appreciated. If you don't have us on any social accounts, feel free to follow us on both Instagram and Facebook. You can do that by finding the Linktree link inside the bio.